Hello, in this video I want to tell you 7 of the biggest mistakes in trading and investing, and the last 2 are extremely important. In trading or investing, making mistakes is part of the learning process, but this learning may have a heavy price for the trader. Therefore, to prevent this from happening, the best solution is to discuss the mistakes of others in the past. In this section, we examine some of the most common mistakes among traders. Note that these mistakes have been repeated many times by different traders, and the result was failure. There's no other way to succeed in trading than to repeat these mistakes. Not having a trading plan. Successful traders enter the trade with a precise and predetermined plan. The entry and exit points for the transaction, the amount of capital involved, the maximum amount of acceptable loss are known to them. Meanwhile, most beginner traders enter trading without a plan. Not having the same plan makes the trader endure a lot of psychological pressure during trading. This pressure causes the trader to constantly change his trading plan, and the result is nothing but loss. Giving too much importance to the past. Many beginner traders decide to trade or invest by looking at the past performance of an asset. This is despite the fact that the trend of the property in question may change after some time. The reason why many beginners enter the market at price ceiling is exactly this mistake. Despite the fact that the past of a share gives us a lot of information, it cannot fully show the future trend. Not paying attention to a risk tolerance threshold. The first issue in entering the financial markets is determining the amount of acceptable risk. For a person who has a low risk tolerance, being in high risk markets like the digital currency market can be very destructive. To enter any trade, you must ask yourself how much money you are willing to lose in that trade. It's a big mistake to enter into any trade without knowing the amount. Not using the loss limit. If you enter a trade and the price trend is against the trade, then you must have set an amount to exit the trade so that if the price reaches it, you will not stay in the trade for more than that. The loss limit is determined according to the trading method and the value of the risk to profit ratio for the transaction. Failure to lose a loss limit will increase your losses in the absence of proper analysis. To determine the loss limit, the trading method must be clear. The loss limit for a day trader is not the same as a trend trader. Failure to pay attention to the time horizon. Failure to pay attention to the investment time horizon creates problems for novice traders. For trading, you need to know how long you don't need your capital. If you need your capital in a month and you enter a trade whose profit or loss will be determined in 6 months, then you may be forced to exit the trade at a loss. Averaging. Many huge losses in the financial markets have been due to the use of this strategy. Averaging basically adding new volume to the losing trade. Given that our analysis may have been completely wrong, this strategy will only increase our losses. Using this method is not recommended for beginners. Using other people's signals. Many traders use the analysis of others to enter the market. In addition to the fact that the analyst may not have enough knowledge or education, it's possible that he has a different trading strategy or capital and risk management than us. Using other people's signals without paying attention to this issue can cause irreparable losses to traders. Thank you for staying with us until the end of this video. Be sure to like the video, subscribe the channel, and turn on notification to support us.